word growth. What is the word growth in an organization? It could be different from sector to sector. It could be different from company to company, even in a similar sector. You see, in the 70s and 80s and even in early 90s, when I joined the profession, people were saying to the finance people that they are prudent, or they are conservative, or they are sort of, they are not the kind of people who always advocate an upward journey or the growth in an organization. In the 90s, we saw a major shift in the profession also, and most of the business houses, we saw phenomenal growth either in Pakistan or in abroad. In the early 2000s, and in fact in the mid 2000s, if you see from period from 2003 to say 2007, even in Pakistan, we saw multiple growth in the business houses, especially in the financial sector. But surprisingly, that growth, except for one or two companies, that growth could not translate into the manufacturing sector. You see, we saw big financial houses and people become bigger and bigger, especially in the financial sectors. And we saw many banks attracted to Pakistan. They came in. But surprisingly, the foreign investment in the manufacturing sector of this country could not come. In the 60s, a lot of investment came in the manufacturing sector. But in the 96 onward, there was no investment in that sector. You see, the word growth needs to be defined in an organization. That what kind of growth an organization wants to achieve. There are organizations who wants to become number one, but there are organizations who wants to keep a sustained growth. They just don't want to become number one. They just want to keep going. You see, and that is very important. So if, as a CFO, you are part of a group which wants to be number one at any cost, your strategy, your investment in say IT, your investment in say your production facilities could be different. But if you want to have a sustainable growth, a reasonable growth, a growth which equate the GDP growth of the country at least, then your strategy should be different. And that should be clearly defined from the top.
Yakub sir, do you agree with that? Because you've spoken very extensively about the changing role and the shaping role in the future.
Yeah, definitely. I mean, he went a bit more macro. I mean, you had a micro question of sustainability in an organization. Now, I fully agree with him. It's the perception of the directors in the boardroom, whether they want to expand in this country or they are in a mode that, okay, we will wind up, take the money out into some other country. So if the objective is that, yes, we are totally bullish on Pakistan and we want to grow, then the sustainability factor comes in. And then you have to create an environment where the organization grows in terms of revenue and profitability. When that is the objective, then you need to have the tools available and the resources available which would give you, would take you to that or help you achieve your vision. There again, the subject is for the CFO. And that is where exactly the roles are changing for CFO. In this particular environment, this is the objective of the organization, the CFO has to be forward-looking. There you don't want an accountant sitting in the back office and generating information. You need a person who has the ability to look ahead. And I need a minute.
Sure. I have a habit of just saying, sorry.
So the second guy get ready. So you have to, then look at things totally different, in a different manner. Then you are not maintaining books of accounts. There's another team which is helping you do that. And as a CFO, you need to then quickly put together a team within your organization, which helps you to generate the numbers which are not backward-looking, which are forward-looking. Because if you want to increase the value of your share, and that is what I mentioned in my presentation that day, that if you want your share value to go from 100 to 200 rupees, only the future will determine whether the share value will become 200 or not. The past will not determine.
Right.
And it is your future earnings that you need to improve. So if the CFO is backward looking, he will never be in sync with the objectives of the board and the owners of the organization. So you have to, as Rahim said, change your outlook from backward looking to forward.
Okay.
I would actually totally add on to what you said. I totally agree with you. The question that I would want to ask all the CFOs that are here right now, firstly,
You can tell he's a media person.
is the question I would firstly like to ask all the CFOs right now is how acceptable are they the fact that an IT department is merging into a finance department, because this model has actually worked amazingly in different parts of the world. But our country, definitely is region specifically, if you're talking about Pakistan, this is something which we really do not really concentrate on. IT is something which our companies do not invest in. Integrating the finance department and the IT department together, it actually cuts down on your costs at a variety of levels. Firstly, the question that needs to be asked here is that how acceptable and how flexible are you in allowing that department to merge, or the CIO and the CFO to work together in order to grow as a company together? I mean,
If I can answer that question, I mean, over the 25 years, about 8 or 9 years, IT department has been reporting to me.
right.
The basic issue and the reason why we even discuss these things, and the first question even Rabia had, is they fight each other or they work together.
That's right.
The only item that I have learned, my own experience, is the communication gap.
Right.
Accountants do not understand the issues the IT people face, and it's vice versa.
Right.
The IT guy does not have the accounting knowledge to understand the accountant's requirement, and they have fights. Now, you need somebody there to bridge that communication gap. That you have to understand both sides, and because the IT guys need information in a very structured manner, so that they can design the IT systems and take care of the needs of the finance guys. Finance guys don't want to give that type of information. They would just say that, okay, make sure a balance sheet agrees. Now, the IT guy cannot develop anything for you if you don't communicate in the way he needs.
That's true. That's true.
So that is the only reason why most of the times the IT department is under the finance department, because the head can sit down and reconcile both parties.
Just a comment. Sorry, sir, just to comment here in the team.
Just in the first question you mentioned about the sustainability of the organization. Means like as the past when was mentioned, it's more it depends on the boards and the shareholder decisions regarding those things. So I still, from the organization point of view, we believe that there's a lot of sustainability in this country in terms of the growth board entity, because of the rising populations and the growth that is coming out of this. Although one should not be mentioning the example like of our own bank in that respect. We just not very old bank. Again, in few years, as you said, what level like IBM said they had a determination to become from a $10 to $20 as a strategy. Similarly, like we had a strategy and we just were nothing in that way in terms of, there was a time when we started with 40 banks operating in Pakistan, and we were just on the last 40th number when we started. In 7 years time, like sustainability, what I'm trying now, we are 13th largest bank in industry.
I know there's a comment here, but just
let me finish this.
No, just to follow up from Adil's question is your expansion, the fact that you're growing.
And then there come to these questions also in that way. That's something we have grown. And similarly, naturally for the growth, as you mentioned, in a banking environment, you need to have more reliance on the IT, because they are not only you are the customer, the depositors are also the bigger customers, and they need information as compared with a manufacturing organization. As you mentioned, that IT and finance are not only, they are mutually.
This question of really mixing the two departments up. My practical experience so far has been that it's not only confined to these two departments. I work for a corporate brokerage house, and each time we come up with a new investment banking deal. For example, 2 years back we were this online trading platform, which we developed in 2003, and today I'm here just because we were launching a new product with IBM as a partner and Catalyst as one. So I think in this 6 months time that has just gone by in coming up with that product, our IT guy was completely devoted to this team which was coming up with that thing. Secondly, before that, through the book building process that we come up with the new listings, it's only the IT guy doesn't really relate or is confined to his area. Wherever a job requires his input, he is married to that department for some time. But my statements or practical experiences can be peculiar to corporate or investment banking background that I'm taking.
Yeah, I would just like to build up on what you just mentioned. When we're talking about the changing roles of CFO, one of the key things is that वो role change क्यों हो रहा था? Because there was some change taking place within the business itself. And it was not only the role of CFO that was changing, it was also the role of IT heads or what we call the role of CIOs being changing as well. I recall the days when the IT was being considered as more of a business enablers, which has now transformed more into more of someone which partners in growth. And that's why exactly the example is shared that when they're actually developing or coming up with some sort of innovative solutions, there was some person from IT who was actually being strongly partnering with the finance in order to deliver the requirement of the business, which was in line with the business strategy. So it was not just about the changing roles of CFO, it's more about the, I think gone are the days when it was more being treated as a, it could have been treated in some organizations, still assessed as more of a cost burden or what you call the cost centers. But still, it may not have reached up to a place of the profit center, but certainly it has gone into a place where the people or the organization are viewing them as a strong business partner. And even if you go by the definition of partner, and I love the definition as, you win and lose together. So there can't be the two definitions of the two people working together, because they have to work hand in hand. It's not about reporting lines, about dotted lines or functional reporting or sideline reporting, but yes, they have to partner. And I think he has just shared a very excellent example, which is a live example that how they made a solution deliver, which was one of the innovation. It could have been a production innovation, it could have been a financial innovation. But the key thing is the things are changing from the business enablement to the, I think, the partnership, and more on the partnership side.
Okay, let me also make an attempt first. It's very exciting, so I don't want to lose out on that. First of all, the statement of business functions and support functions. I am from the management thought that all the groups in the company are business functions. There are no support functions. We are all business functions. One good example of explaining this is, we say whether a particular support function is a profit center or not. I think there is no profit without cost management. So as far as I'm concerned, I think all business groups, whether they're client-facing or not, are business functions and are value drivers and are equal strategic importance. Two, your other question about the finance function, I'm just forgetting that the question that you asked.
What I was wanting to ask was that the CFOs, are they?
Yeah, thank you for reminding me. Whether CFO and IT functions can be combined together. I don't think there's an easy answer for that. I personally believe that is the size of the organization largely which provides the answer. If the organization is quite large, then it may make sense to have two separate functions, because indeed there are two different skill sets required for these two functions. But it definitely can be combined in a small organization, particularly in the organizations which are belonging to some specific sectors. The most important thing, I think, is said by Mr. Yaqub Sardar, okay? What is the communication between the two? And communication, of course, is the starting point of my point, and that is, what is the reliance? What is the help to each other? How transparent and clear we are to ensure that we're going to work together? That's the key. It's also possible that an IT group is reporting into a finance function, and there could still be a disconnect. So it very much depends upon how we work together in general and in specific situations.
One of the organizations, very large organizations of Pakistan, and they had some kind of IT setup, and they had different applications working in different departments. They were not very integrated, but still they were doing the job. And then they decided to move to an ERP system. And they spent quite a quite a hefty amount and a lot of money, efforts, time was put in, and they moved from those legacy applications to an ERP system. And after the cutover of that ERP system, the CEO, who has now retired, he asked us, in fact, just as by the way, us means like somebody from IBM, that we have spent so much money and I haven't got anything from all this investment. I'm like, the same reports that I was getting previously, I never knew how those reports were being prepared, but I used to get them. I'm still getting the same reports. So why have we spent all this money? So I narrated this little story just to tell you that IT in most of the organizations have done their jobs, right? Like they have put in ERP systems, they have put in core banking systems, they have put in so many applications and all that, and they keep putting that. And as a result of that, there is a lot of data which is being generated, right? Now, my point only is that IT should not be relied upon, my opinion again, IT should not be relied upon to make sense of that data for the department. Now that's the data is there, the data is very much there. Now it's the job of, like for instance, the finance department or others to have their own business analysts, to have their data miners, to have their analytics people to make sense of all that data so that they get value out of it and the organization gets value out of it.
Just wanted to jump in because there seems to be some sort of history between this question of should finance or IT be mixed or not. I think primarily if you go back, mainly the reason that IT existed was to provide the reports that were used by finance to do their analysis. But although there isn't any fight, but there is a struggle going on all over the world to actually establish IT as a strategic partner. A lot of the organizations globally and definitely in Pakistan have got to that level where they realize that IT is not just a support function within finance that just churns out report for finance to actually do the analysis, but they can actually play that strategic role not just for finance but with all the other departments within an organization. And the degree of difficulty that maybe a finance head will have of understanding marketing still exists, and maybe the IT guy who is linked in more with all of these other areas like marketing, sales, strategic planning could be a better interpreter and the go-between of these departments, whereas finance always had that difficulty. The only reason they were successful previously was because they had these reports that they were the ones who were controlling and giving out. And that's where the change has come about. And realizing that, companies have started to give IT the seat on the board or at that round table in executive leaderships, because they realize that without these guys, it will be difficult, and if we don't have it that way, the information coming out will only be the ones which are with the view of the finance department.
When we talk about the role of CFO, in order for him to add value to the business, he has to closely work with marketing function and inventory, because IT is a support function, but in order to move the business, he cannot do in isolation work on only figures and relation with IT, but he has to be involved with the other functional departments.
Without any further ado, I've got a colleague standing here. Her name is Iram Azhar. She's the team leader south for...
Just a second.
Sure.
That USD actually has a lot of collateral and a soft copy of this complete report as well. So it's not an empty.
No, it's never an empty box. There's always a lot of information. So Iram's going to be talking about ROI and value. What should a CFO look for in a technology partner?
My name is Iram Azhar. I work in IBM, where I've been working since the last 10 years. Prior to that, I was in banking, 3 years with Citibank over here in Pakistan, and three years in Mashuk Bank in Dubai. For the next 10 minutes, I would briefly just take forward the CFO study that was introduced by Ahmad, and also talk about the expanded role of the CFO. What we found out in the CFO study, in which 1,900 CFOs were interviewed globally, across different geographies, across different industries, across different sectors, was this that the expectations from CFO have increased tremendously. Earlier, when the CFO was expected to focus only on the balance sheet, now there's a paradigm shift from that. And the CFOs are now expected to be either in an advisory role or a decision-making role in lots of other areas within the enterprise. This is what the study demonstrated, that increasingly the CFO is being expected, other than the cost reduction, which of course is the number one priority for any organization, and that is what is expected from the CFO. Other than that, they're expected to be in an advisory role for selection of key performance indicators. They're expected to be part of those committees or those teams which have to decide on capital asset management. They're expected to advise on risk management, in prioritization of resource allocation, in strategic revenue planning, in business model innovation, and in information strategy. So information management strategy is something which is key for a CFO. And in any big enterprise, the CFO is expected to have a grip or to have a handle on the information management. And this is subsequent to the previous slide that we had. This is what the CFOs also said, and what they themselves feel are the number 3 priorities that they have, which is other than the core finance area that their exact responsibilities are. They are expected to provide inputs into enterprise strategy. They are expected to measure and monitor business performance and to drive enterprise cost reduction. However, in all the 3 areas, they feel there's a major gap from what they are expected and what they're delivering. And one of the major reasons why they feel that there's a gap between what they're actually delivering and what they're expected is because they feel that information management is not being done to the extent or with the type of focus that it should. So information management is a key concern for any CFO, so that they can bridge the gap between what is expected from them and what they're actually delivering. This is something which Adnan had also touched upon, is basically the CFOs can be described in 4 basic profiles, in which they can be categorized as either scorekeepers, which you can expect, maybe some manufacturing companies where there's not a lot of focus on IT, or maybe not a lot of focus on integration of the finance with IT. There, basically, it's a scorekeeper job that a CFO is expected to do. The next level is that of a disciplined operator. A disciplined operator is someone who has finance operations focused, has information provision, and understands or can interpret the performance. The level after that is, okay, now if you look at the disciplined operators, we can have different sectors where you can think the CFO can be categorized as a disciplined operator. Any suggestions, which industries or which sectors you think that a CFO can be, a level above than scorekeeper, but then a disciplined operator? Maybe anyone would like to, from the different industries that you're representing, any suggestion?
Can you repeat?
Basically, what we're discussing here are the 4 different levels of CFOs. Okay, so the basic level is that of a scorekeeper, which a very small organization, or let's say a manufacturing organization, where all the focus is on manufacturing, and very little focus on IT and its integration with finance. But then a level above that is that of a disciplined operator. So, what do you think a bank, maybe the CFO, the CFO of a bank might be categorized as a disciplined operator?
No, I think, you see, my experience suggests that, again, it depends where you want to involve the CFO. You see, first time when I entered into the union negotiations with the CBA, it was primarily the domain of the IR people. But I was surprised that whatever terms they are agreeing with the CBA, they just do not giving due attention to the finance side of that negotiations, you see. So when we talk about the discipline is a wider term, irrespective of whether it's a financial discipline or non-financial discipline. Even the non-financial discipline has an impact over the financial disciplines, right? एक वर्कर को कितनी छुट्टी देनी है और जब वो जाएगा तो उसके बाद जो दूसरा उसकी जगह काम करेगा, you see, it has its own cost. And these were the things that, there's one example where people just tend to forget that these things have a negative impact at the end of the day on the bottom line. It could be a little impact or virtually no impact, or impact which goes out in rounding off, but it has an impact. As a CFO, generally, though we say that we should look after the materiality, but believe me, even immaterial things have a very, very big impact on your bottom line. So when we say discipline, it's a multi-meaning word. The non-financial things have definitely an impact on your finance numbers. So you tend to involve your CFO as a vibrant organization in even those things which you feel that there is no role for finance executive. Fair enough, no role, but involve it. And you will find some kind of finance numbers in there.
But to answer your question, it depends on the organization, not the industry. And I've seen CFOs doing wonders in a very small organization, and I've seen CFO, I live with that chap sometimes, he works for a company I don't want to name. He's a terrible person who has a who has a totally different outlook in life. He runs the largest organization in the country, but has no clue of what discipline is, has no clue as to how to solve issues, throws everything on the finance minister. So you can have its personality, it's your own passion, it's your own willingness to add value, or you could be a 9-to-5 operator. You could be a person who can do wonders in an organization.
I think that's a very good observation, that can be personality driven, and that's not the way it should be, because it's how the organization, what are the demands of the organization, and that's what's required from a CFO.
Arun, I'm just wondering if you can ask also, are there actual value integrators within here?
I think the value integrator is the topmost level, where there is absolute sync between IT and finance. So I would say even in the developed world, it's very rare, because there's always some level of friction, there is always some gap somewhere. However, there are some instances where the value integrator role of the CFO is there. But yes, Ravi, as you said, if you can think of some examples where the CFO is actually a value integrator. Any suggestions?
Let me try. You gave an example of banks, and the question was whether this is a disciplined operator. I personally believe that the CFO function in a banking organization is definitely a value integrator, because banking has no commodity to sell. Banking has money to sell, money to purchase. So it's definitely a value integrator job in the banking sector.
And this is what quite a few studies have also shown, that banks and telecoms, these are two industries where it is absolutely important for the CFO or for the CIO to be a value integrator.
But when you started defining the ultimate value integrator, it's not IT.
Yeah, you're right. It's basically
the
CFO.
finance department to be in sync with the board of directors of the organization.
Exactly.
IT comes, it's 2%.
Exactly.
95% is the board of directors.
That's true. But then for the CFO to be in that category of being a value integrator, as far as information management is concerned, is something that the CFO has to depend on IT or on the different business functions. So that dependence is there on IT or on other business functions to get into that role, of a value integrator.
But you see, when you're creating value, you may have to be a good negotiator with a bank. You have to be a good team member who's gone and who's going and buying a particular asset for the organization. You don't need IT all the time. You need much more different skills at that time and knowledge in order to really add value. Okay, once you've acquired that asset, how to run it, manage it, and then then IT comes.
I just want to add one personal practical experience on the banking sector. Not there. More important factor one has to reckon with this. In any organization, whether it's manufacturing or telecommunication, all this, the financial institution is a very different role to play because besides the owner's equity, there's always a risk of the depositor's money there, and one has to take care of those money more important in that way. For that reason, the role has to be, and this is most of the banks are in institutions of value integrator. But then, not only for the purpose of the shareholders, but also for the depositors. And samely, the regulator, the central bank, is requires them to be in that role in that way. Not only from the integration of the IT function and information.
Exactly. I mean, you have to strike a balance between, let's say, the credit concerns of the bank and also the new initiatives that are planned.
I'm touching you very gently because I think there's a spark right next to KESC that's about to blow up. Professor, please go ahead.
You just provoked me with. I think if I be slightly bit more, or rather highly undermined, because a CIO can be a good value integrator, and it can be at par and equally at par as if a CFO, equally representable to the board, and an equal value addition to the business as a business enabler. I think we slightly have to. I slightly have to disagree here, because the role of the CIO in an organization is nothing to do with the data itself. It is to provide you with data, and someone else has to do the analysis of that part. So we have to have a disconnect somewhere, because we have this thing that we just take IT too far into things, and we assume that IT is just a robot and executing orders on our behalf. That's not the case. And I have my practical experiences on that, whereby IT and the CIOs have been equally good value integrators into the business units, as good as the CFO.